right. So tonight I'm going to be talking about how to create a profitable trading strategy, easily. You don't have to make it complex at all. It has to be very, very easy. It has to be very, very easy. Now, I'm going to be sharing my slide with you guys so that you all can see. I'm going to be sharing my slide with you guys now. Sean, share screen, start now. Great. Okay. Yeah. So we have it. What is a trading strategy? What is a trading strategy? For the sake of newbies, it is very important that you first understand what something is before you actually go into it. So, a trading strategy is a method of buying and selling in the market that is based on predefined rules used to make trading decisions. Before we started this class, I was explaining something earlier that if you just go into the market and then you just buy or you just long and you just sell without a particular reason, what is convincing you that when you take your long here, you are going to take your profits later, that the market is going to go your way? This is a trading strategy. Some also call it a trading plan, whatever name you like it, whatever name you like to call it. What is important is that it is the method that you use in taking your buying and selling decision in the market, in the cryptocurrency market. If you trade forex, also, it's not just in the cryptocurrency market. A trading strategy is required in forex, also is required in indices, and is required in a lot of financial markets. So it is very important that you have a plan, that you have a strategy. Now, when I first started my trading journey, one of my headaches was how to create a trading strategy. Then I looked all over the internet, but I was still not convenient with the answers that I was getting. So along the line, I noticed that okay, the best way for me to just do it is to just start trading. Along the line, I was learning furthermore, and then along the line, I later got my brain, and then I had a trading strategy. Do you get it now? So it is important that you have a strategy. The strategy is how you do things. The methods you use to do things. What are the things that trigger you? What are the things that trigger your buy action? What are the things that trigger your sell action? That is what a trading strategy is in summary. So now, whatever your strategy is, it is important that you keep it simple and straightforward. You keep it simple and straightforward. I hope someone is learning. I hope someone is learning. Yeah, yeah. So now that we already understand what a trading strategy is, it is the methodology that we use in creating, buying, and selling decisions. Now let's look at these simple steps that we are talking about. This particular meeting, you can as well go back to it. I'm very sure that the session will be recorded, so you can as well go back to it, and it is going to serve as a framework for you in choosing your strategy. So even if you want to know whether you don't have a good strategy, or you just want to change your strategy, it is also important. It is also important. So now let's look at the first things is that we are going to look at when choosing a strategy. Now, the number one thing is the time frame that you have, the time frame that you work with. Now, this has to do with the time that you can dedicate for trading in a day or in a week. Are you the busy type? Are you the 9 to 5 guy? Are you the 9 to 5 lady? Are you the person that has all the time in the world? You are always working from home. You have the time, you can go through your charts, 2 hours, you're still on your chart. Or you are the kind of person that you're going to go to work and come back late at night. Now, this is it. If you are the kind of person that you have lesser time, it is advisable that you make use of higher time frames. Why? Because your trade can take longer to trigger. Before the trade gets to your take profits, it can take longer time, and the longer time it takes, the more profits. Do you get it now? That's just the ideology behind it. Now, if you are the kind that has little or no time, okay, if you have little or no time, you can use higher time frame. And then if you have a longer time, that you have all the time in the world, you work from home and all of that, now you can use a lower time frame. Because in lower time frames, let me tell you one secret about time frames. Higher time frames, things happen slowly, but in a lower time frame, things happens very fast. And that is why you see day traders taking 2, 3, 5, 6, 7 trades in a day. Do you get it? Because they can easily enter and exit a market. They can easily enter and exit a market, especially somebody using a very low time frame. Using a 15 minutes time frame, when you set your long happen, you take your profit ASAP. That is it. So, but if you want your trade to take longer, that means you have to be using a longer day time frame. So, in summary, what you need to know is that if you have lesser time that you can dedicate for trading, then you can make use of higher time frames. Higher time frames like the 1 day time frame, the 1 week time frame, it all makes sense for you. If you're a kind of person that you have low time, you work 9 to 5, you don't even have time for trading, are just following signals and all of that. Just make sure that you are using higher time frames when you are chatting or when you're analyzing your coin, and expect that that trade is not going to get to your profit level immediately. Why? Because you're using higher time frames to analyze. You can also use shorter time frame too. I'm not don't get me wrong. I'm not saying if you have lesser time you can't use shorter time frame. You can as well use your shorter time frame to determine your entry points. If I see a buying opportunity on the 1 day time frame, if I want to zoom in and see where I can enter, the perfect place I can enter, I can as well use my 4 hour time frame or my 1 hour time frame to determine my entry. The same thing happens to the longer time frame. When you're using longer time frame, you can as well zoom out, look at the higher time frame, and see the exact direction of the market before you even place your trade on the lower time frame. I hope you all are getting it now. Now I know there are a lot of questions on your mind. Don't worry. I know there are a lot of questions running in your mind, but don't worry, you get to ask them later. Now, let's move on to which asset should you trade? Which of the cryptocurrency assets should you trade? This one is also very important that you know the kind of trade that you should take. Now, before we take a look at this and before I explain this, let me quickly see if I can entertain 1 or 2 questions. So, if you have a question, kindly raise your hand ASAP. If your hand is raised up before, kindly lower it. Now, if you have a question, kindly raise your hand. Let me quickly see you. Okay, SMB. Let me give you the mic right now. Okay, SMB is not raising their hand. If you have any question, just quickly raise your hand and I'm going to give you the mic. Okay, let me see. Charles Benson, I can't hear you. You can just unmute yourself. You can just, yeah.
Okay, okay. Good evening, sir. Good evening, everyone. Hope you can hear me now.
Yes, we can hear you. Good evening.
Okay, my question is in regards to the time frame you talked about. Okay, in the sense, I'm the type of person that I'm working and I don't have all the time to trade. Most times I trade on calls. So is it better trading? Because most times when you enter the trade, you tend not to have chance to always check out your trade. It's when you have a little time you go and check out your trade to know what's happening and you leave. So what's the best time frame to use when since I find myself in such situation?
Okay, thank you, Charles Benson. You can mute yourself back now, and I'm going to answer your question. Yes, thank you very much for that question. Like I was saying earlier, there are a lot of people that don't even have time to check their chart and all of that. In this kind of situation, you need to use your higher time frame. Like you can use your 1 day time frame because you know that before your trade trigger, it might be 2 day, 3 day or so. As long as you've seen your trading opportunity, as long as you've seen your edge, maybe you are looking at the support, and on the 1 day time frame, if I buy now, this market is going to increase in price, and then you buy out your support, you hold on for it. Meanwhile, you still need to set your stop loss also. So if you're the type that work 9 to 5, just make sure that you are working with a higher time frame and know that your trade is going to take longer before it hits your profits. Do you get it now? And then if you are the kind that you have a lot of time, you can check the chart, 2 hours on chart, you're still on it, then you should use a shorter time frame so that you can take more trades and win more trades. So that is, I hope I have answered your question. Prestige, I'm going to be giving you the mic also so that you can speak now and ask your question and I will answer it right away. Okay, Prestige, you can unmute yourself now. Okay, okay.
Uh, Good evening, sir.
Good evening.
And thanks for the info that have been shared so far. Yes, sir. Like my question goes like this: like in selecting a coin to trade, like which coin is best to trade? Is it all those major cryptocurrency like BTC Ethereum, and others, because I don't really trade BTC. I don't even analyze BTC. But mostly, I don't really know what's up. At times, if I analyze a chart and when there is any when there is any massive dump or massive pump on BTC, it will surely influence my analysis either positively or negatively. It all depends. So I don't really know.
Mm.
Like mostly analyze BTC before we analyze our major, like our preferred coin, like the coin we are willing to trade. Mostly first analyze BTC before we analyze any other coin. And why choosing a coin to trade? Like, is it advisable for us to stick to normal major currency like BTC and all like that, or or like other alt are also like more like there are some odds, they are more struggles than other, like all those ETH and S happening, they are also odds, but at times they tend to go in line with BTC while other I don't really get, sir. I hope you understand my question.
I fully understand your question, and it is this your question that will bring us to the next point we are going to be talking about. Thank you very much. You can mute yourself now. Thank you very much. Yeah, yeah. So I like your question because actually what you're talking about is which asset should you trade, and it is going to bring us to the next thing. And once I explain this, I'm also going to explain how Bitcoin affects other altcoin, and then what you should do in that instance. Bitcoin might invalidate your perfect setup that you have on an altcoin, and then it happens. It happens a lot. That is why you should also let's just go over it. So, which assets should you trade? Which asset should you trade? It is very, very important that you know exactly which asset should you trade. So I've classified these according to two terms, or should I say two subjects. Now, the first one is volatility. For you to be able to select the assets that you are going to trade, you must consider the factor of volatility. Now, let me explain what volatility is. For the sake of those that don't understand what volatility is, or you're just a newbie, volatility is how fast or how slow a coin moves in price. If we say a coin is volatile, that means there is a sudden change in price. Either the coin suddenly pumps up or the coin suddenly comes down. Do you get it? That is what volatility is. So volatility is basically how fast or slow a coin moves in price. It is very, very easy to understand. Now, there are some coins that when you see normal movements in the market, there are some coins that make great movements. Do you get it? When coins are pumping in the market, you see this coin, they will do nothing less than 4-5%. And when coins are dumping in the market, they will do the same thing. They will move nothing less than 4-5%. So it's important that you know this coin. So I'm going to give you a few of them. They are altcoin. Now, talking about Bitcoin now. Bitcoin also is volatile, but it is not all the time. This is how. I don't know if you trade very often, you are going to notice that once Bitcoin moves 2%, altcoin can move 5-10%. That is the secret, and that is how traders make money. I'm not going to lie to you. So if Bitcoin moves down -2, -3%, you see this altcoin. Some might even go down 20%, honestly. And if you are in a short in that particular position, you've made your money, honestly. So some of these coins are altcoin, and let me just mention a few. There are still more of them. There are still more. But one thing I know is that Bitcoin is less volatile than the rest of the altcoin. So if Bitcoin moves a little bit, these altcoins are going to give you great movements. Do you get it now? So these coins, they are correlated with Bitcoin, and this is why. Bitcoin has a pair with every other coin in the financial market. You can check all of the crypto exchanges that you use. Bitcoin is the mother of all coin. This is what I mean by a pair. If you are trading Mana USDT, you can see Mana USDT, Mana BUSD. You are definitely still going to see Mana BTC. That's what I mean by the pair. So Bitcoin is paired by each and every coins in the market, and all of them are correlated together. So when Bitcoin moves, these coins also move. That is still like the simplest explanation you can get to that correlation. So that is simply it. And then this correlation is not something that is new. But let me just tell you, I listed a few coins that I know at least if the market is moving or if Bitcoin is moving and Bitcoin does a sudden change, Like if Bitcoin goes like 2%, this coin will go like five, at least 5, 4%. Do you get it now? Now, all these things, it is important that you check these coins and know which one that is suitable for you. But I'm just going to mention a few here. So the first one is ApeCoin. ApeCoin does great movements. If it's pumping, it will pump good, and if it's dumping, it is going to dump good. So if you are in a long or short position, you are definitely profiting as long as you are in the right side of the market. Now, another one is Mana, which is decentralized Mana. Another one is ADA, which is ADA, and then another one is Koti. Another one is Ethereum. Ethereum too also moves. It is also volatile, but it is not as volatile as the rest of the cryptocurrency. But Bitcoin is less volatile than the rest of them. So simply that is volatility. And now, if you now want to analyze these assets, you must first analyze your Bitcoin first. See where Bitcoin is going, and make sure that you are not betting against Bitcoin. Don't bet against Bitcoin. Don't bet against Bitcoin. It doesn't make any sense. So if Bitcoin is pumping and you feel everything is good, and you see an altcoin that is down, then you can pump it off. Or you see that Bitcoin is actually at a place where it wants to reverse. Do you get it? Instead of taking a long on Bitcoin, go and take a long on an altcoin, because an altcoin is going to move and it will give you more profits than that Bitcoin. But meanwhile, you don't just choose any or our altcoin. You make sure that you choose altcoin that are valid. You make sure that you choose altcoin that moves well in price. These things are very easy and they are on your charts. Just go and set your chart, maybe on your Binance or your TradingView, set it to 1 day time frame and check all of those coins one by one. See and set Bitcoin too. Now compare the two. Compare this particular Bitcoin chart and then your particular coin. Let's say, for instance, you are choosing Mana. Now, when Bitcoin moved 2% in a day, look at how Mana moved that same day. And now tell me the difference. Then you understand what I'm talking about. That is why most people trade altcoin. Do you get it now? It is that volatility. You should trade volatile markets. As long as you've noticed this market, then you are good to go. Now, another factor you should consider when choosing a coin. In fact, I would say you should like stick to, if you trade 2 or 3 or 4 or 5 coins, and then these coins have been going well for you, you've been taking that those trades, and then those coins have been acting well. A long time, if you continue trading this set of assets, you continue to make profits from them. Do you know why? Because you've mastered them and you've known how this coin moves. You already know their particular levels. You already know how this coin moves. You've already known their behavior. So it's as easy as that. So if you just have selection of 5 coins, don't worry. I'm still going to get to where I talk about finding the edge and also find your edge in trading. So now let's move on to the next one. The next one is liquidity. Yeah, the next one here is liquidity. And liquidity is simply how fast your order gets filled without spillage. I hope you all are noticing this. Liquidity is how fast your order gets filled without spilling. Now, don't get it strong. Liquidity can also have another meaning. Liquidity also means money. When we say somebody gets liquidated, that means their money gets consumed, by the futures trading. Do you get it now? We've explained liquidation on our YouTube channel countless times. Now, liquidity here, we are talking about how fast your order can get filled. Has this ever happened to you guys? I don't know. It should have happened. Maybe you are trying to fill an order, either sports market or futures market, and then let's say you're trying to buy like 0.5 BTC, or you're trying to long 0.5 BTC, and instead of your 0.5 BTC to fill at one particular time, if you go and check your trading history, you're going to see it. Instead of that particular order to fill once, you should make that long decision, make that buy decision. You should see it once. You won't see it like that. You can see one trading history. You can see it at 2.5. You see the other one at 2.5. This means that your order got filled twice. Do you get it? And for that 2 times that your order gets filled, don't let me lie to you. Binance or whichever exchange you are using, or Bybit or whichever exchange you are using, they are going to collect their own trading fees for each of the trades. Now, if you are the kind that you trade large quantity, you are going to continue to get spillage. That thing I explained to you right now is called spillage. So you're going to continue to get that kind of spillage, and it will be a loss to your side, because even they don't care whether you win your trade or you lose your trade, they will still collect their trading fees. So now you must also check for markets that are liquid, means market that has money, market that has volume. Do you get it now? So that your order will fill at once and you escape paying multiple trading fees. If you trade large accounts, like you trade, let's say $100,000, $200,000, you are going to see that these people will be charging you trading fees that is going to be more than $1 and upward. Do you get it now? So that is it, honestly. So for you to avoid those kind of spillage, you must make sure that you are trading a liquid market. And a liquid market ensures you that a market is going to move if the market has money in it. Now, how do you now know that a market is liquid? If you go to any of your exchange, you can when you want to search coins, do you get it? Where they classified all of the coin, you are going to see those coins. Now you can sort this coin by volume. Just sort the coin by volume. On Binance, I think you click on that name aspect, and then there is one ascending and descending. So you can set it whether the volume should show you from the lowest volume to the highest volume, or it should show you from the highest volume to the lowest volume, so that your order can fill and get filled fast without paying the transaction fee twice. You don't want to pay a trade that you don't even know whether you are going to win or lose. Why do you have to pay your transaction fee twice? It doesn't make any sense. It has happened. In fact, even if you are trading low accounts, it can happen to you. It can happen to you. You can pay trading fees twice. Sometimes it's even 3 times, sometimes 4 times. It is always like that. It's always like that. So these are the things that you should check for if you are trading your market. Now, the next thing you want to be checking is finding your trading edge. Now, I hope you all are learning. I hope you all are learning something new. You can see that this particular session is different tonight. You can see that this particular session is different tonight. If you are just joining in, you are welcome. You are welcome. We've talked about a lot of things, but don't worry. I'm still going to do a catch up for you guys. So let's move on. Let's move on. Let's move on. Now, I'm finding your trading edge. Now, if you want to find your trading edge, if you want to create your trading opportunities yourself, we've gotten to the aspect of actually creating a trading opportunity for yourself, either longing or shorting through the strategy that you have. When creating your strategy, you must put it in mind. All these things are important so that you can document them. Now, the first one is you need to know the trend. You need to know which particular trend it is. Are you going up or you are coming down? Where is the market facing? Is the market, draw your uptrend? Is the market going up? If the market is not going up, turn it to a downtrend. Do you get it? Or is it that the market is going sideways? Because there are three, normally we always think that there are two ways to the market, two directions to the market, either up or down. It's a lie. The market can still go sideways before coming to that up or down. Do you get it now? The market can consolidate. It can consolidate before going up or down. So now you must know that particular trend that you want to trade particularly. It is important. Now, after you know that, it's important that you mark your levels. I watched a video about there's one creator, I can't really remember the guy's name, but there's one content creator that talked about what he does every Monday morning. I think someone shared it in our group. So the guy said every Monday morning, if he wants to trade, that he's just going to go to his chart, and then he's going to choose his 5 coins, and then he's going to clear all charts, every drawing that he has done in the previous week. What happened in previous week should stay in previous week. He's going to clear everything, and then he will now start drawing his levels afresh. He will mark the important levels, the support level, the resistance level, and mark everything afresh. And he's going to set alerts when price gets to this level.
Okay. Sorry. Let's move on. Sorry about that. So, it's important that you have your indicator set. You have your indicator set, and everything is working all fine for you. It is very, very important. So, be it you are the kind that you like using MACD, you can try it out. Maybe once the MACD crosses, that is when it is suitable for you to start taking your trade. So you should watch out for those indicators. If it is your RSI, your RSI crossing 70 and 30 too is also very important. The 70 is the overbought region, and then the 30 is oversold region. So it is very, very important that those particular level. And then maybe you are the type that like using your moving averages. Maybe when the price crosses the 50-day moving average, that's when you take your trading decision. Or when the price crosses the 100-day moving average, that is when you take your trading decision. So all these things all these things are very, very important when you are taking your trades before you take your trade. So it is very, very important that you know these things. Okay. So now that you know that Number one, you have to know the trend. Very important. After you know the trend, you need to mark your levels. You need to set your alerts, and then you also need to choose the indicators that suit you the most. Personally, for me, I don't use a lot of indicators. As long as I've set my levels and my RSI is good, and also my MACD, I'm very, very good to go. Probably that's the reason why I just give you the most popular indicators that are available. There are more indicators than these ones. You just have to find the one that works best for you. You just have to find the ones that work best for you. So the next one is entering a trade. Now, how do you enter a trade? How do you enter a trade? It is very, very important. Now that your plans are set, if the price crosses any of your levels on any assets that you trade at all, make sure that you execute it without hesitation. You know, the previous point is finding your trading edge. Once your trading edge is good, you already have your trading edge, you already mark your levels. If price comes or does a mistake to cross that particular level, you know, take it without hesitation. Take it without hesitation. Just take that trade without hesitation. This is very, very important. And now you should also make sure that you are managing your risk. You know, you have a risk management plan. How much are you willing to lose in a trade? Do you get it now? Your RR must also be super good. Your RR must also be super good. So, you should know your RR is your risk to reward. You should know how much you are willing to lose for a particular profit. That is it. That is your RR. It is also very, very important. So you can go back to these videos. You can go back to these particular sessions. If you did a screenshot or you are writing something down, you can go back to it. And as well, anytime you want it, you can as well create a trading strategy for yourself. So again, let me mention that the trading strategies that you're going to use in a bullish market or in a bull market is different from the one that you're going to use in a bear market. I hope you know that. It is very, very different. It is very different. You know, if you are taking profit before, you know, if you are taking profits in a bull market and you're happy and all of that, your stop loss space is very large. In a bull market, you're happy. But in a bear market, if your stop loss space is very, very large and if your stop loss keeps eating, unfortunately, in a bear market, you just find out that you're going to blow your account very fast. So honestly, that is it. You must make sure that you know all of these things. Now, I'm going to be accommodating your questions now. If you have any questions, just kindly raise your hand and then I'm going to give you the mic so that you can speak and ask your question. Okay, let me see who is raising. Michael FCN, do you want to speak? If you want to speak, yeah. So I think you can unmute yourself and speak now. Chukwemeka, you can speak now and let's hear you. You can just unmute here.
Yeah, good evening.
Good evening.
Yeah, I didn't really get the other point. You said it was, I've already forgotten the point, sir. But I didn't get the point. My phone off.
Okay, is it the last time that I said entering a trade?
Yes.
Okay, yes. I said since you've already have your planning set before, you don't need to hesitate when you want to enter your trade. That's what I was trying to pass across there. Now that your plans are set, if the price crosses any of your levels, you know, previously you've already marked out your levels, you know, every new week, clear your charts, mark your levels, and then choose the asset you're going to trade. And once the price crosses, make sure that you set your alerts on your Binance. You can set as many alerts as you want on Binance. I think 50 is the max. So, and you don't even need up to 50 alerts before you start trading. So once you set your alerts and then the price crosses that level, just take your trade without hesitation. So since you've already marked out your levels before, then you're good to go. Honestly, that is how to trade. If you're the type that you just go into the market and then you just start buying, you just start selling, no, you're a very, very bad trader. A bad trader doesn't have a strategy. You know, you must have a strategy. With all of these things that we've said, it's just a framework for you to build your strategy around. Now, if you now want to build your strategy, you can say, okay, for instance, I am personally going to be trading only 5 coins. I'll choose this coin, I'll choose XRP, I'll choose TRX, I'll choose ADA, I'll choose so coin. Now, fine. Now that you've chosen that coin, now look at yourself. The time you have, I'm just doing a summary now for the sake of people that just joined in. Look at the time you have. Do I have a lot of time? Can I spend up to 2 hours, 3 hours on charts? If yes, fine. Then I can take as many trades as I want in a day. I want to be a day trader, and then I can as well be using the shorter time frame and take more trades. Now, to which assets you want to trade, you can as well say volatile assets. Choose assets that moves. Do you get it? Either up or down. Choose assets that moves, and then the liquidity also choose assets that have volumes in them. Assets that have volumes in them. And now, finding the edge, you should know your trend, mark your important levels, and then choose the indicators that works best for you, honestly. And then the next thing for you to do is to enter your trade. I hope that is very, very clear now. So if you have more questions, Chukwemeka, you can mute yourself now.
Okay.
Thank you.
Okay. How did they set alert on Binance?
It's very easy. Just if you are trading futures, you won't see the alert function on your futures pair. Just go to any spot pair, search for that particular coin. Maybe it's ADA USDT. Just click on it, and you see below that part the downside of that particular user interface. You are going to see something that looks like, I think it has an icon of a bell also. I can't really recall, but there is one part beside the buy and sell, just the left side beside the buy and sell. You are going to, once you click on it, then you can set that particular trade. You see when the price goes above or when price goes below. So if the price is actually below that particular point, you can say when price goes above, maybe Bitcoin now, when price goes above 21,000, alert me. It's as easy as that. So you are just going to click on set alert. It's as easy as that, and you are fine. So even if you want to set when price goes below also, you are going to do the same thing. So when price go, if Bitcoin is currently in 19,000 or 20,000, I can say, okay, when price gets to 18,000, just alert me. So it is as easy as that. I hope you understand this now.
Yeah, thank you very much.
Yeah, you're welcome. Okay, Charles Benson, I'll be giving you the mic now to speak. Yeah, let's hear your question, Charles Benson. You can unmute yourself now, Charles.
Okay, good evening, sir. Good evening, everyone.
Yeah.
Okay, my question is in regards to, you talked about liquidity. Okay, I understood what you said about that's volatility, but I still don't understand that liquidity, that's the market volume. Because, like what you said, when you understand coins that are volatile, you still need to understand the liquidity. There are coins that have market volume. So I don't know if you can explain more about that.
Okay, thank you. You can mute yourself now while I answer your question, so it will be clean. Thank you. Yeah, the liquidity is very simple. Now, I explain liquidity as how fast your order gets filled without spillage, without having to pay your trading fees twice. If you've been trading constantly and consistently, you see that there are some points whereby, let's say you want to buy Ethereum, maybe you long or you want to buy Ethereum, maybe 1 Ethereum or so, and then you see that order did not fill at once. The other did not fill once. The other filled up to like 2 times or 3 times. So instead of you buying Ethereum at immediately or at a particular price immediately, you are definitely not going to buy that particular Ethereum at once. Do you get it? So the order is going to feel this way. The order might say, let's say you've already bought 0.4 Ethereum first, and the second order is 0.6 Ethereum. So that means that order filled twice. For that 2 times that the order filled, trust me, Binance will take their trading fees twice. Do you get it now? So that is because that particular coin is not liquid. Do you get it now? That means there are no awaiting orders to fill your own order. For every buyer, there has to be a seller at the other hand. And for every seller, there must be a buyer. If you are selling and you are taking profits, and you are happy that you are taking profit, this is someone at the other end that thinks that place where you are taking profit, the person is buying, the person thinks the market is going to pump up from that place. That is it, honestly. That is just how the market works. When you are selling, somebody is buying at the other end. Do you get it now? When you are buying, somebody is selling at the other end. Now, look at the kind of market whereby no one is ready to buy your coin at the other end, or nobody is ready to sell for you at the other end. That is it, honestly. Nobody is ready to sell for you. Number one, the order might take long before it's filled. Number two, that particular order it might fail 2-3 times, and then this will cause pillage. It means you are going to spend more money on the trading fees. The institutions understand this thing. That is why they actually manipulate the market sometimes so that they can get. Let me just quickly chip it in. This is what institution does for retail traders. When they want to long a coin, they now dump it. We all will think that market is actually going down. If you set the stop loss, your stop loss will trigger. And if you are the kind of trader that just follows anything the market does, you just think, okay, wow, we are going down. The market is going down. You now start dumping all your coin. Before you know it, you're shorting, the way you are shorting, these people are now going to open a new long order so that all of their orders is going to fail at once, and then they will not get spillage, and they will not have to pay a lot of money on trading fees. So that's why it's important that the liquid market. And how do you now find liquid coins? You just go to your exchange, look at the coins that have more volume. If a coin has 1 billion upward, I think that's still enough. So just look at it and then sort it by the volume. Just look at the exchange. If you are still not getting it, just go to Google and search how to sort by volume in how to sort coin by volume in your particular exchange. Do you get it now? And what I want you guys to understand is that the futures trading volume is different from the spot market volume. If you check Binance now, you see that the futures market volume is more than the spot trading volume. Means traders are trading on futures more than sports. The volume is more on futures than sports at that particular present time. So I think that is it, and I think I have answered your question. So Elias, I'm going to be giving you the mic now so you can ask your question.
I want to be cleared on the order. If I place an order and it does not fail, is it that I am good and I cancel it before it gets filled? Am I going to pay a fee for order that is not filled, or is until the order gets filled that I pay the fee, the trading fee? 2, the volume. Which volume should we look out for? Like, maybe you should just give us a heads up so that we will know that, okay, from this volume upward is a good trade to take. Thank you very much.
Okay. Thank you very much, Elias. Thank you very much. Thank you very much for that question. Okay, great. For the first question you asked, if you set your order, like right now, if you set your order now, and you cancel this, maybe something happened or you feel that it was a mistake before the trade triggered, you cancel that particular trade. I'm telling you that particular trade, you are not going to be charged for trading fees in it. You're not going to be charged for trading fees in it at all. You're not going to be charged. No one is going to be charging you for trading fees. No one. Because the order didn't get filled. Okay, if you say you want to buy something now, you go to the market and let's say you want to buy let's say 2 bottles of drink, and maybe something happened. Someone called you that, oh, why do you want to waste money on drinks? I have drink already, and you've not yet made the payments. You've not yet collected the drink, you've not yet made the payments, and you say, oh, I'm very sorry, I'll not be able to buy this drink now. Something just happened, I need to go home now. And you go home with your money. So that is it. There was no trade that was taken. So that means there is no trading fees that will be charged. Now, on the second question you asked, that is there an ideal volume for you to know whether a market is liquid or not? Is there an ideal volume? Now, I would like to say, like, it actually depends on the kind of volume that you are trading. Do you get it? Like, I mean, you personally, how much do you want to use to enter a trade? Is it $100? Is it $500? Is it $1,000? Is it $5,000? $100,000? $200,000? $1 million? It all depends on that. Now, if you are the kind that you are using a lot of money to enter a trade, like let's say $1 million, $2 million, $1.5 million, you will need a very, very liquid market. A market that has billions of volume. Do you get it? Billions of volume, so that you can be sure that your trade is actually going to trigger. Do you get it? Now, this mark is not something that is set by anybody. No, I'm just telling you this so that you know that it depends on the volume you yourself want to trade. But if you want to trade $1,000 or let's say $500, now if you are looking at coins that have millions of millions in volume, just look at the volume if you want to look at the liquidity. If you're looking at a coin that has millions in volume, you can still take that trade. If the coin has, let's say, 1 million upward, since you are trading in thousands, so just put it that way. If the market has 1 million, but if you are seeing coins that have very, very low volume, they are seeing 1,000 volume, man, I will even advise you not to even try it, honestly, because it won't make any sense when everything starts going down. But the fact is even that most of these exchanges, these things like that might happen mostly in centralized exchanges, but in centralized exchanges, they have enough volume. I'm looking at my Binance app right now, and I'm seeing that the lowest volume, the coin with the lowest volume, this is futures trading anyways, the coin with the lowest volume here is 1.97 million. Like 1.97 million has been traded, and that is Dodo BUSD. 1.97 million has been traded. Let me quickly take a look at my. Oh, great. I'm seeing another one on my, what is it called now, on my sports markets right now. And then I'm seeing $7,000 volume. That's JST. If you're looking at your Binance also right now, you know what I'm talking about. You see JST, you see BTG. Now I'm seeing $7,000 volume, $10,000 volume. Now, if I take my particular trade to this kind of coin and say, okay, I want to buy at this particular price, it might take long before it fills. So that is what we are trying to explain here. And I hope you all get it. I hope you all get it. Now let me see if there's more persons that want to ask a question. Michael Essen has been raising his hand since morning. I'll allow you to speak now so you can ask your question.
Good evening, everyone. Sorry about the other time.
Okay.
So I have two questions. First of all, about filling an order, what about you place a market order that does get executed immediately? What about that? And second, what's the second one? Sorry, let me try and remember.
Okay. Okay, you know what? Let me just answer. Okay, can you remember it now?
Okay, don't worry. Answer this. The second one I'll
Okay.
ask later.
All right. Just mute yourself now and let me answer this one. Now, if I get to right, you said, what about a market order? Now, a market order is also a way to avoid spillage in some kind of way. Why? Because your order gets filled immediately. Do you get it? Your order gets filled immediately at the last trade. I think it depends on how you set it anyway. You can set in your Binance futures that you want your order to fill at the last price, which means the last price in which somebody traded that particular coin. Do you get it now? Or the order gets filled according to mark price. That mark price is calculated, I think, is an average of every futures trading platform or something like that. I can't really remember how it is, but you can actually set it that way. So if you are filling your order, if you are setting it as market price, that means once a trigger price has already triggered and your market price is, the price is going to particularly fill at that current price of the coin. Do you get it now? So you can still even avoid spilling through that. But the fact is that a liquid market is still not advisable to still trade a liquid market that way. But one fact is that about that market price, your coin is going to fill immediately. Your position is going to get in immediately. That is it. It is as easy as that. It's as easy as that. So let me see who I can before the time. Okay, before we exhaust the time, let me see who I can allow to speak again. Okay, Chidi Ebere, I think this should be the last one we'll be accepting for tonight, and then we'll call it a night. Yeah, Chidi Ebere, I can't seem to hear you, Chidi. Okay.
Sorry, a quick one. I just remember the second question.
Okay, Michael.
Okay. Yeah, which exchange do you prefer, or would you advise to trade on for futures trading? Based on their fees and the rest.
Okay. I like your question. Now, the fact is that choosing the exchange you want to trade also, it has to do with the volume. I can't choose a particular exchange for you. Do you get it now? Because these exchanges, they have their advantages over each other. I can't tell you that this is the best exchange that you must use. Do you get it? So they have their advantages over each other. Binance has advantage over some other exchanges, meaning that it is the exchange with the most trading volume. Come on. look for it anyway. And then there are other exchanges like Bybit also. I know Bybit has more opportunities. Maybe if you trade often, you are going to get rewards and all of that. Do you get it? And there are also many other exchanges like that for Binance Futures, even for spot markets. So they have their advantages over them. But what you should be looking at when choosing your exchange is that make sure you are choosing an exchange that has volume, so that your trade is going to feel very fast. You get it? It's going to feel very fast. I can't really say the difference in their trading fees right now because I don't have it from the top of my head. But I know that you can as well check that out for yourself later and see. And if you trade for low volume, you still really have no interest in looking at the trading fees. But if you trade high volume, now you know that, okay, my trading fees, I must always check it so that I know the one that is going to be suitable for me. Always, you want a lower trading fees. Do you get it now? So that is it. You can as well use that to choose any exchange for yourself. Just try it out. Sometimes we learn by actually practicalizing. Most times, by actually practicalizing. Most of what we know, it is because we tried it, trial and error. I tried it didn't work for me. I tried it didn't. When we're talking about time frames, I forgot to mention there was one time I started with 15 minutes time frame. I was not so convenient with it. Then I advanced to 1 hour time frame. Now I'm very good with 1 hour. I'm okay with 1 hour. I'm very convenient. And recently I tried 4 hour time frame. I said, wow, this 4 hours is very, very suitable for me. I think I'll go with 4 hour. And since then I've been using 4 hour. But it doesn't mean that if I want to make my entry, I can't use the lower time frames to check. So honestly, that is it. You must try and find out what works for you. So I think who's up? Sorry, we'll have to take your question another time. We've used sufficient time already. Thank you all for attending this particular session. We are grateful at CryptoBase Media. So, what is left for you to do now is to share CryptoBase Media. Come on. We hold this kind of session every Saturday. Next Saturday, make sure you are coming with somebody, at least one person. Make sure that you are inviting at least one person. And I'll make sure that I ask everyone. You must point out the person that you referred to this particular session next time you are coming in. So thank you very much for attending. We would like to have you next time. And I hope that you've learned a lot. Don't worry, this session is recorded if you didn't start from beginning. So we are actually going to post it on our YouTube channel later this week. Thank you very much. You